Hey, this is René, and in this video I want to talk about the GoLong Expert Advisor. And this is a program that I use for several weeks now in a live training account of mine. I've shown this already a lot on my YouTube channel, so if you're interested, check this out. In this video I want to explain to you what you can do with the version that I just uploaded to the MQL5 market. So first of all, let's have a look at this. It's already running in the strategy tester, and you can see it already opened the first position. And this program is really a super simple program, but very, very effective. So if I speed this up, we can see exactly what it does. And what it does is it just opens a position at whatever time you want during the day, and then closes this position at another time of the day. And the name GoLong is not only chosen randomly, but it is exactly what the program does. It always executes a long or a buy position. So in this case here, my settings say that the position should be opened at 1 a.m. in the morning and closed at 10 p.m. in the evening. So we are pretty much all of the during the whole day invested in the market. And you might ask yourself, why are we doing this? So the basic idea of this is to use it in, for example, indices or stocks. And here in this example, I use this program in the US Tech Index. And since usually, like in the long run, indices or also single stocks should increase in value if the companies are not doing the completely wrong things, then these markets should, in the long run, gain value, right? So the basic idea is that, for example, if we have a look at the period of 1 year, on average, the US Tech, for example, should have a higher value after 1 year compared to the start of this specific year. So this is exactly what this strategy was made for and where it can be used, or in my opinion, where it makes sense to use this program. You might ask yourself the question, why are we not just executing one position at the beginning of the year and hold this position throughout the whole year and then close it at the end of the year? This would be the easiest approach, of course, but unfortunately it's not possible with CFDs and or Forex products, because here you always have to pay the rollover costs or the rollover fees, because if you hold positions overnight, because of the leverage, you will have to pay a fee to a broker, and this fee is actually so high that it will most likely make this whole operation unprofitable. So I've done a lot of testing in this direction. You can do it yourself if you're interested, but I figured out that the best solution is to just close the position at the end of the day and open a new position at the beginning of the next day. Still, this is of course still highly sensible to costs. So if you try to use this with a broker that is super expensive, it will not work, of course. So it's really important to use a broker that has overall very low trading costs, because this is a huge factor for a strategy like this. And while I am talking, we can see here that even though we had a drawdown already in the beginning of the test, this drawdown now more or less recovered, and the latest trades should now also be profitable. So if we have a look at the graph, we can see that this program pretty much one-to-one mirrors the performance of the index. And as I explained, this is exactly the idea. Of course, it only makes sense to use this product if you really want to make use of the leverage, because if you do not want to leverage your portfolio by saying, let's just say you want to trade 3 different or 5 different markets using this strategy, and you want to leverage everything so you can invest in 5 different markets using the strategy, then it makes sense to use a program like this. If you just want to invest in one market without leverage long term, it does not make sense to use this program at all, because in this case you can just buy a ETF or exchange traded fund. So these are the basics. So before we do a longer backtest in a few seconds, let me explain quickly what the settings are. So you can see with the most basic settings that I personally use in my live account, it will just open a position in the morning, it will close the position in the evening. But I did enter some more input variables, and yeah, we can see here, like I can activate it on the chart, but I can also have the inputs in the tester. But yeah, let's go through the inputs quickly. We can also say we want to wait for a new daily high before we open the position. So by default, and in the last test, it was false, but if I change it to true, we will see in a second what changes. Then we do have different inputs for the trading volume. And in fact, we have 3 different inputs. We can say we want to trade a fixed volume every single trade. If we select this, it will open the fixed lots here. So this input for every single trade. But if we choose volume managed, it will open the fixed lot input multiplied by every $1,000 in your account. So let's say you have 15K in your account and you say fixed lots per X money. It would mean that for every 1,000 euro in your account, you would open 0.1 lots. So with 15K, it would be 15 times 1,000. So it would be 1.5 lots if you go with volume managed and these settings here. And then, if you go to volume percent, this means that you will open the position with a lot size that is calculated on a risk in percent. So let's say, for example, the risk percent is 100. So 100% risk. So you risk pretty much your whole account with one single trade. And what this means is that, for example, if you do not trade with a stop loss, just like I normally do it, it will invest so many lots. So if your underlying or the market that you trade goes to 0, you would lose your money. So let's say, for example, or let's do another quick test here to demonstrate this. So here I have the volume percent selected. I say I want to risk 100% of my account and the base money is 100K. So this is the amount of money that is the base pretty much for my calculation. And then I do not use a stop loss. So what this does is, if I show you a quick trade, it will take the base money, the 100K here, and it will divide it by the amount that you can lose with every trade. And since we do not have a stop loss here, we could lose 16,000 something for every single trade. So we would divide 100K by 16,000 something, which would result into 5.9 lots for this single trade. And yeah, and if I change the settings, so let's say, for example, I still risk 100% of my account, but the stop loss percentage is now, let's say, 10%. This would mean, of course, that the position size is a lot higher in this case. Because if we do another test, we will quickly see that now we cannot, like on our trade, we cannot lose the whole 16,000 something, because now for a trade, we do place a stop loss. So we will see, if I make this a little bit smaller, we will see that there is a stop loss 10% away from the position open size. Open price. So this means the 100% risk here are now calculated only on this distance. So if we reach this stop loss, we would lose our whole account pretty much. So for this reason, the lot size is now a lot higher. So if you're wondering why I personally in my account use 100% risk and no stop loss, this is because I, for myself, have decided that it is really unlikely that a index market will drop to 0. But this is not a recommendation. This does not have to make sense for you. If you think another input or another settings would work better, go for it. I don't recommend anything. I just explain the settings here. Then we do have the time settings. So by default, I chose to open in the morning at, let's say, 1:05 a.m. But we could also say we want to open just after 12 p.m. here. So then it would take a lot longer, or it would open the position at the middle of the day. And combined with the wait for new day high feature, this would mean that not every day there is a trade. Because if I show it to you in the test again, we will see that now if we reach 12 o'clock, which should be here, we can see the time in the upper left corner, you can see there was no new daily high after 12 o'clock. So this is why we do not see a trade here yet. And this can be useful if the market drops, like here. So on this specific day, for example, we prevent a losing trade because we say we only want to trade after a new day high. So let's fast forward 1 or 2 days to see how this looks if there is a new daily high after 12 p.m. or 12:05, as I have it in the inputs right now, because then we will open a trade. And I think this is what we should see here in the tester very soon. There we can see on this day there was a new high after 12 p.m. So we open a position. I think this will still be negative at the end of the day. But yeah, you can just see how this feature works. And it saved us like 2 or 3 losing trades in the beginning of this specific testing period. And here, if you do have a good trading day after 12 p.m., you can of course still make profits with the settings like this. Okay, there was no profit on this day, but I think you understood how this works in general, right? So yeah, this is the wait for new day high feature. Then of course you can decide if you want to close trades at the end of the day. If I move this to false, it would not close the trade at the end of the day, for example. And yeah, you could just use this feature if you think that it would be beneficial to benefit from long-lasting trends. And you can also use something like a break-even stop, for example. So we could say, for example, if the trade is, let's say, for the US tech, we could say if it's 300 index points or 30,000 points in profit, we want to move the stop loss to break even. And the points here are calculated as follows. So for every market, you have a specific amount of digits after the decimal point. For example, here we do have the US 30, which has 2 digits after the decimal point, which would mean that here 1 point would be 0.01. So 30,000 points, as I have it here in the inputs now, would be 30,000 times 0.01. So it would be 300 index points. So this is how you can use the break-even stop. So for example, if I go and start another test with these inputs now, we will see that the trades will be opened only after 12 p.m. if there is a new high on this specific day. And also we will see if this position goes into profit, there will be a break-even stop. So yeah, here I fast forwarded quite a bit, and we can see since I disabled the closing operation at the end of the day, we now see multiple trades open at the same time. Also, we should see as soon as these trades are into profit, there should be the break-even stop to secure the trades once a trade is 300 points in profit, which should happen for the first trades here very soon at around the 600 level, which we hit here. And yeah, we can see the first trade is already secured at the break-even level. Then we will see as the market goes up even more, the second trade is secured at the break-even level, since we are, you can see here close to 30,000 points, or we were 30,000 points in profit. And this will also happen for the next trade, of course, if the market goes up even more. Of course, it does not really make sense to open so many positions like this and then just use the break-even stop, because they would never really be closed. But yeah, we do have more settings that you can use if you want to work with something like this. For example, you could say the stop loss should only be 10%, and then we want to risk only, let's say, 5% of our account on every single trade. And the TP would also be, let's say, 5% or something like this. And then we can also use a trailing stop loss, which we can say, for example, after 30,000 points, or let's say 35,000 points, we want to move the trailing stop loss in a distance of, let's say, 10,000 points. And this would mean that once a trade is 35,000 points in profit, there would be a trailing stop loss 10,000 points after or below the current price. So if we go for another test with these settings, we will see what changes if I fast forward again to the point where we do see multiple trades. Okay, so here we go. This is, again, the same testing period. Everything is the same, and we do see the first trade. And I want to make this a little bit, I want to drag it like this so we can see now I moved the trading stop, the initial stop, so we do risk like 10%, or the stop loss is 10% away from our entry price, and we do have this take profit 5% away. Also, we do see the lot size is calculated a little bit differently, because now I reduced the risk on every single trade. There is the second trade already, and I think we would see a third trade before the break-even stop then comes into play, and then also the trading stop loss eventually. So you can see all of these settings can be there can be a combination of these different settings if you think it is beneficial for your strategy. And at this point, I did not do all of the testing myself, so just feel free to get the free demo version of the program to do a lot of testing. Please do me a favor and make these tests before you purchase the program. And if you have any questions, ask me any questions before you purchase the program, because on MQL5, I do not have any option to give you a refund or something. So make sure to use the free demo to test everything. And if you feel like this strategy could be good for your portfolio, or you want to use this, then go for it. So you can see here, first trade has now, was now processed with the break-even stop here. So this trade at the very bottom here has the break-even stop triggered already, and once there is a little bit more profit, it should also activate this trading stop loss once it is 35,000 points in profit. So it was very close. The market has to go a little bit further up, so we will see this trading stop loss activated. But right now it's just coming back a little bit, so let's wait until there is a new high. And I think there was a new high, if I remember correctly, from the very first test. And here we are close. And you can see here, now this is the stop loss for the very, for the trade at the very bottom here. And you can see now it is more than 35,000 points in profit. So it will be dragged along 10,000 points, with the price pretty much. So and if the market comes down a bit more, it will secure the profits. And this is how you can combine these different settings. And also we do see the trading stop already for the second lowest position here. So I want to wait until it hits the stop loss here, so you can see how this turns out, and then you will see that these two trades at the very bottom will be closed in the trading stop loss and profit. Now also the break-even stop for the next trade here was processed, and just a nice combination of these different settings. And come on, hit the trading stop loss here, please. There it is. So you can see the trades at the bottom were closed. The next trade has the break-even stop already activated, and the latest trade here at the very top is still waiting for the break-even stop, and it still has this first initial stop loss. So yeah, this is how the settings work. So let's have a look at the last few settings that I did not explain. So order comment is just the comment for your position that the expert advisor uses for the orders and positions it opens. Then there's the magic number. The magic number is very important. If you use multiple expert advisors in your account, this one or other expert advisors, make sure to use a different magic number for every activation of a expert advisor. Because if your computer shuts down, for example, or if the MetaTrader crashes and you restart everything, this is how the expert advisors find their own trades. So you will need to use a different magic number for every single expert advisor in your account. And then the chart comment is just, you can decide if you want to have this little chart comment in the upper left corner of the chart. So so if I just go to the, let's say, default settings, because these are the settings that I use in my live account also, that I show on YouTube a lot. This is, again, it's not a recommendation. It's just what I use, and I want to show you how this looks in the test, and how this hopefully turns out also in the future, but there's no guarantee. Nobody can predict the future. But historically, based on 100% tick data in the strategy tester, it looked like this, and you will see this here in a second, and this is the last thing that I will show in this video. And you will find it on MQL5, the program. Check it out. Check out the free demo. It's free, no risk. And if you decide that you like to use this program, I would love to hear that you use the program. So this is pretty much it. I hope you like this little summary, and I hope that you like this specific expert advisor. Have fun using it and a good time. Bye.